one of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive, right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. But the knock-on effect is more than just the US, because it gives a green light to everybody else except Australia have been dragging their heels, India's dragged its heels, a bunch of places drag their heels. But as soon as the US goes, we're all in, they'll all come. Because people sense in the end, however late you come to this thing, you still realize this is the biggest macro opportunity of all time. It's a way of making money. If you think about it, Bitcoin has done 150% annualized returns since 2012. This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is there's token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing, how everybody can get involved, whichever country you're in, however much you are, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people will join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different companies or projects selling block space. That's all they do, which is a data storage and essentially that block or distributed ledger. And they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything codes and work that I did showing that every 4 years governments need to refinance their debts. And what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycles. And then we go into macro fall or autumn, crypto. You know,
when if we were trying to time it,
of the year. So it's just an annual cycle.
When do you say?
It's the beginning of the year. We go into the next autumn, the fall or the autumn cycle. That's usually the most explosive.
Beginning of next year.
Yeah, and that's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything goes banana.
And how long will the banana zone last for?
That depends on global liquidity. Normally it lasts until about November because of this cycle. It lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021. And then it ripped, but it didn't really extend and everyone kind of got caught out by it was double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle, but thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle. And and they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why in 2021 everyone's expecting 2017 to happen?
Yeah.
It doesn't. Maximum pain.
Would you say that the whole narrative of a super cycle is, should not be revisited as a possibility?
So let's play this through. Let's say we're towards the end of 2025. The US economy and the global economy's picked up. What happens is inflation usually picks up a bit and the central banks start raising rates or tightening liquidity in some form. And that slows down 2026. Doesn't mean we get a recession, but we get a slowdown. So unless we change that dynamic, there's no reason to believe the 4-year cycle won't keep repeating. It'll stop being repeated.
Is any specific differences we're seeing in this cycle compared to the last cycle? There's always small variations of which asset classes lead the cycle, but anything else is fundamentally different this time around?
No, we've got some new asset classes come in, but otherwise it's pretty much the same. So Bitcoin usually leads in spring and summer.
Which is now.
And then Bitcoin dominance falls and alt season starts.
In a couple of months.
Which is...
When you say alt season, is that utility tokens, meme coins, or both?
It's probably everything.
Everything, okay.
It almost doesn't matter, including all the dead tokens. My guess is even stupid shit like Luna will go up, 5x. Why? Because it's now a meme about the broken cycle last time. Who knows what goes up? It gets crazy season, is the point. So that Bitcoin dominance part of the cycle, that starts dropping from here, and then we start having the old season. But nothing structurally looks different. In fact, it's very similar. When you map the charts, very similar to the 2016-17 cycle, and not dissimilar to the last one.
How big of a difference do you think Trump's election has made to the industry?
Every single senior person in that administration is talking crypto all day. They're meeting crypto people all day.
The president had a DeFi project, Raul.
He's trying to buy back the exchange.
Oh, yeah, I know that. It's insane.
Okay, this is bananas, right? We've got Cynthia Loomis. I can't wait for next year. I'm so excited. I'm like, they've all turned into DJs.
Exactly.
But the knock-on effect is more than just the US, because it gives a green light to everybody
else except
Australia have been dragging their heels. India's dragged its heels. A bunch of places drag their heels. But as soon as the US goes, we're all in, they'll all come. All crypto people, right? Because people sense in the end, however late you come to this thing, you still realize this is the biggest macro opportunity of all time. It's a way of making money. If you think about it, Bitcoin has done 150% annualized returns since 2012, including 3 70% plus pull downs, drawdowns. 150%. Once you realize that, if you start with some capital, what is the point of even starting a business?
Exactly.
All of my friends, they'll all be speaking here, Dan Moorhead, Dan Tapiero, all of these guys. We're all macro guys. We all grew up together in the industry. We've all left. Sure, we use macro frameworks to understand this, but none of us trade oil or currencies or whatever anymore. It's irrelevant. This is the biggest trade we've ever been given.
This is in line with what I said. So these are the OTC deals. So
yeah,
okay, that's right. Exactly, yeah. So that's where the opportunity lies.
A lot of the foundations have to do OTC deals because they need liquidity.
Exactly.
Foundation. So they go and find hedge funds or groups of individuals. We saw this in TON. We've seen it in tons of these where they offer something at a big discount. Obviously, the Solana stuff that came out of FTX. It's a good opportunity, but you get locked up for a period of time. So you're taking.
I remember you talked about exactly what you're saying now in the last cycle a lot, on the whole mismatch between VC funding and hedge funds. And we're seeing that materialize right now because these tokens, the VC-backed tokens, at least for now, we're not even seeing close to the performance we've seen in previous cycles. So we're not seeing launches at 10, 20, 30x anymore, rarely.
No.
And a lot of that liquidity is getting sucked into meme coins.
Yeah.
It's been insane.
One of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive. Right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. So I think it's still to come, but the VC markets had no exits outside of tokens. There's been no equity exits in any project. We need Circle to go public or get bought. We need some of the, Kraken, we need some of these bigger things to recycle the VC money to then ratchet the whole space up again. And then, as you say, if we've captured a certain amount of liquidity, yes, it's increasing, but then you've sucked a whole bunch into the casino of meme coins, it takes some of that away. Because this entire industry trades on attention. And there's only so many of us in the industry. So let's say there's 1 million active people in the industry. Well, that's 1 million people's attention. And you've got 10,000 tokens launching a day. How much attention can we give to anything? So it really is this game of attention, and memes have got it now because everyone believes that they can make the next 100x. And so utility stuff, layer 2s, nobody cares.
It's sad.
It will come back because we'll have different investors coming to the space and looking for real value. It's just, I think, a nature of where we are. I think the next stage is a lot of the application stuff, the real world assets, the deep in, getting utility, gaming, it's all to come.